Hello and welcome back to the channel. Best technical analysis trading video you will ever need. Technical analysis is a methodology to predict future price movement of stocks, cryptocurrencies, or forex pair through the use of technical studies, indicators, support and resistance, and other analysis tools in the market. It is also used to determine the direction and strength of the price movement to make an accurate decision when and where to enter the trade to make a better profit. Technical analysis is a vital part of traders' success. Traders may either lose money because they partially understand technical analysis and do not know how to use them correctly, or struggling to catch the end meat from trading to survive over time. So for that matter, I am going to show you in today's video everything you need to know from market structure, indicators, areas of values, all the way to candlestick patterns and formations, chart patterns, and stop loss and profit target. This video will be the only video you will ever need, which is based on my technical analysis knowledge I have gained during so many years of my trading career. Let's start this video with market structure. Market structure is the behavior, condition, and current price movement which can tell you if the market is trending or not. Traders use technical analysis to predict price movement through candlestick chart pattern. Market structure can move up, down, or sideways. Since price is moving in a zigzag fashion, as a result, the price either zigzagging upward, downward, or zigzagging sideways, which is range market. Let's see how the market structure moves. Price trending higher. When price is trending higher, it's always making higher swing high, and the pullback makes higher swing low all the way up. When price trending lower, it's always making lower swing low, and the pullback makes lower swing high all the way down. When price is going sideways, it's always going up and down within two constrained boundaries called support and resistance levels. Of course, I'm going to talk about all of this in today's video in full detail. To analyze price movement, we need indicators, support and resistance, trend line, and so much more, which all of them are formulated based on historical price data and price structure. Since the foundation of all these technical analysis is price movement, therefore, the first thing I'm going to talk about here is chart pattern. Let's see how does chart pattern work. Candlestick chart pattern. Let's take a look at this chart pattern. This is BLDP stock D1 time frame. Each candle represents 1 day of trading. This is Apple stock D1 time frame. Each candle represents 1 day of trading. This is Bombardier stock D1 time frame. Each candle represents 1 day of trading. What is the difference between these chart patterns? These chart patterns are all have the same foundation of technical analysis, no matter what market you are trading in. Whether you are trading stock, forex, cryptocurrencies, or whatsoever. These candlestick price chart consist of so many single candles that display the high, low, open, and close of a security for a specific period of time or time frame. Since the foundation of all these technical analysis and chart patterns are nothing but these single candles, therefore it is important to show you what are these single candles and how does it work. Bullish and bearish candlestick representation. Let's assume this is a bullish candle with green body color. It represents the buyers are strong in the market and price might go higher. Let's assume the time frame of this candle be 1 day. It means it takes 1 day for the duration of this price movement of this candle to form. You can also have a shorter time frame like 30 minutes, 15 minutes, or 1 hour, or even longer time frame like 1 week or 1 month, and find a new candlestick representation. This is the open price when the market opens. This is the close price when the market closes. This is the lower shadow, represents the presence of buyers in the market, and this is an upper shadow. It represents the presence of sellers in the market. And these are the high and the low for the duration of this candle. Since the presence of sellers are very small, therefore the buyers are very strong to push the price higher. Let's assume this is a bearish candle with red body color. It represents the sellers are strong in the market and price might go lower. Let's assume the time frame of this candle be 1 day. It means it takes 1 day for the duration of the price movement of this candle to form. You can also have a shorter time frame like 30 minutes, 15 minutes, or 1 hour, or longer time frame like 1 week or even 1 month, and find a new candlestick representation. This is the open price when the market opens. This is the close price when the market closes. This is the upper shadow, represents the presence of sellers in the market, and this is the lower shadow, represents the presence of buyers in the market. These are the high and the low price of this candle for the duration of the time frame. Since the presence of buyers are very small, therefore the sellers are very strong to push the price lower. Trending market uptrend. This is ERF stock D1 time frame. The market is trending higher. It's always making higher swing high, and the pullback is making higher swing low. And if you notice, each higher swing high is higher than the previous one. Each higher swing high is higher than previous one. The same thing, each higher swing low is higher than previous one. This is higher than the previous one. So this is the characteristics of strong uptrend. Let's take a look at this demo example. Now, this is again, the price is still is in uptrend. You see the price is making higher swing high, higher swing low, higher swing high, and then this pullback, instead of going straight down, it consolidates, and sometimes it goes in range and go up and down, but as long as the price doesn't go below this higher swing low, this is still considered as uptrend. But if it comes below this, then we may have an uptrend reversal. So let's see a real example to see what is an uptrend reversal. Trending market uptrend reversal. Let's take a look at this ERF stock D1 time frame. First, the price is trending upward. When market's trending higher, it's always making higher swing high, and the pullback is making higher swing low all the way to the top. You'll notice each higher swing high and higher swing low is higher than the previous one. This is the characteristics of an uptrend continuation pattern. Now take a look at the last higher swing high and also the pullback higher swing low. You see this pullback after this higher swing high, the pullback is coming down, and instead of here going upward to continue the uptrend, it continue going down and make lower swing low, and then followed the pullback makes lower swing high, and afterward the trend makes lower swing low and the pullback makes lower swing high. That is the characteristics of downtrend or uptrend reversal. So as you see below this horizontal line, that is, we can seek for a selling opportunity. I will show you how to place a trade. Trending market, downtrend. Let's take a look at this chart. What is the direction of this trend? You guessed it right. It is trending downward. When market trending lower, it's always making lower swing low, and the pullback is making lower swing high, all the way down. Now, if you notice, each lower swing low and lower swing high is lower than the previous one. This is the characteristics of downtrend continuation pattern. Now, if the downtrend want to continue, the new lower swing low and the new lower swing high must be lower than the previous one. Otherwise, we may have a downtrend reversal. Let's take a look at this demograph. Now, in this demograph, the price is making lower swing low, lower swing high, lower swing low, lower swing high, all the way here. And from here, if the price want to continue, it should make lower swing high below this line and coming down all the way and make lower swing low below this lower swing low. So you see what happened. It passed this line and make high swing high, and the pullback make high swing low, high swing high, high swing low, all the way. That's the characteristics of an uptrend. So as soon as the trend passes this line, then we have a downtrend reversal. So in my next slide, I'm going to show you how you can enter the trade in this situation. Trending market, downtrend reversal. Let's take a look at this QM stock chart. First, the price is trending downward. When market trending lower, it's always making lower swing low, and the pullback is making lower swing high all the way down to the bottom. This is the characteristics of a strong downtrend continuation, and we are looking for selling opportunities as long as the trend continue in downtrend direction. Now let's take a look at this lower swing low here. If the downtrend want to continue going lower, this pullback should reverse before this horizontal line. And if the trend want to reverse, then this pullback should continue past this horizontal line and then make higher swing high, and then the pullback afterward make higher swing low all the way to the top. And that's the characteristics of a strong uptrend. And this is an excellent opportunity for traders to go long. This is how the downtrend reversal take place. Next, I'm going to talk about area of value using support and resistance. Support and resistance area. Support is an area in the market where buyers are stepping to push the price higher, and resistance is an area where sellers step in to push the price lower. Support and resistance are based on historical price data, and it is used to spot possible reversal, used as entry point on trend continuation, and also it is used to set the stop loss and profit target. Traders always use support and resistance to make a better trading decision. To use support and resistance in trending market as entry point is very simple. Let's draw our support and resistance in an uptrend based on whatever we have learned so far in the previous lesson. Entry point using support and resistance in an uptrend continuation pattern. Here the market is trending upward. I draw my support and resistance right here. We are looking for a previous resistance that is broken to become support, and this is how we use support and resistance in trend continuation model for entry point. This is a good place for enter the market, and this where we find trading opportunity. Now, Entry point using support and resistance in downtrend continuation pattern. Here the market is trending downward. I draw my support and resistance right here. I am looking for previous support. This is previous support that is broken to become resistant. This is resistant here. And this is called break and retest strategy. This is breaking the support and retest the resistance and provide a trading opportunity right here. That way we are going to talk about it later in this video. This is how we use support and resistance in downtrend continuation model to find entry point. Now let me show you how you enter the trade using real example. Buy opportunity in uptrend continuation pattern using support and resistance. This is the price trend, QM stock, D1 time frame of finance. The price is making higher swing high and the pullback is making higher swing low. This is the characteristics of a strong uptrend. Now at this stage, we draw our support and resistance right here. And we see the price is going up, hitting the resistance area and bounce back and close below the resistance and going upward, break the resistance and close above the support. Now the resistance becomes support, and this pullback coming down and hit the support area and provide a buy opportunity, and then bouncing back and going straight upward. Now it provides a buy opportunity here, so we can enter the trade at the close price of this bullish candle, and we put our stop loss just a bit below the support, and also we put our profit target just a bit above this swing high or the previous swing high, just a bit above this area, and that's how we use our stop loss and profit target. So this is how you find entering opportunity in uptrend continuation pattern and put your stop loss and profit target. Entry point in downtrend continuation pattern using support and resistance level. This is Euro British Pound, the stock D1 time frame. The price is making lower swing low and the pullback is making lower swing high, and this is the characteristics of a strong downtrend. At this stage, we can draw our support and resistance right here. We see the price is coming down, hitting the support and bounce back. Again, the price is coming down and the pullback is going up and hit the resistance area and bounce back. Here, this is where we can find a selling opportunity in downtrend continuation trend or pattern. We can exit the trade basically at the close price of this shooting star or at the open price of this bearish candle, and we put our stop loss above the resistance, just a little distance above the resistance, and put our profit target below the lower swing low, below this lower swing low. So this is how we find selling opportunity and put our stop loss and profit target using support and resistance level. Indicators. There are hundreds of indicators out there in the market, and each of them have a complicated and tedious calculation, which I'm not going to go through it, and instead I'm going to use two indicators in this video that I use the most to help me making better trading decisions. Indicators can simplify your trading and provide clarity on market condition and help you where the price trend might go next. It can identify trend direction, area of value, and it can help you to find entry point and determine where to place your stop loss and profit target. The most useful indicator that I've always used whenever I place a trade is average true range, or ATR. This indicator calculates the average price movement of the last 14 candles. With ATR, you are staying in line with volatility and time frame of the market. It will help you to place your stop loss accurately and prevent you to be kicked out of the trade prematurely due to a tighter stop loss. The second indicator that I'm going to talk about is moving average. Moving average is my second best indicator that I use the most in my trading. You can install this indicator by clicking on moving average and choose 20, 50, or 200 for period. These are the most useful period trader use worldwide. If you click on 20, it means this indicator takes the close price of the last 20 candles and divide them by 20 in order to plot SMA 20 line on your screen. For SMA 50, you need to take the close price of the last 50 candles and divide them by 50 to obtain SMA 50. There are three ways to use moving average in your chart. The first objective way is to define trend direction. If the trend is above the SMA 20 for short-term trading, the trend is in uptrend, and if the price is below the SMA 20, then the trend is in downtrend. The second way to use moving average is to use it as area of value. In an uptrend, when price comes close to the moving average, traders look for buying opportunity. The third way I use moving average is to use it as trailing stop loss. You can obtain 2, 3, 4 to 1 reward risk ratio in a trend continuation pattern. Let's have a real example using moving average and ATR indicator. How to enter the trade using moving average and ATR indicator. This is BCE stock D1 time frame. In this graph, the price is trending upward, making high swing high and higher swing low, showing the price is heading upward. I also installed moving average with 20 days period. Since the price is above the SMA 20, it confirmed an uptrend. This is in line with uptrend continuation pattern. I draw my support and resistance level right here. The price come close to the support right here. This is a support, previous resistance, and it bounced back. This is in line with dynamic support. In dynamic support, the price is coming close to the dynamic support, penetrate inside, and then it gets rejected and going upward. So I have a strong reason to enter the trade at this location. So I entered the trade at the close price of this candle. I put my stop loss 1 ATR below the low of this candle, right here, and I put my profit target 3 ATR above the high of this candle, which is right here, and I have the value of ATR, which is set at 55 cents for that candle. and the information of this candle, the open, high, close, and low price of this candle, I have it here. So it can be calculated, the stop loss and profit target can be calculated very easy. So this is basically how you can enter the trade using moving average and ATR indicator in trend continuation pattern. You can also enter the trade the same way in downtrend continuation pattern. The second method you can set your stop loss and profit target is you can use the same bullish candle and put 2 ATR below the close price of that candle, and you can put 4 ATR above the close price of that candle for profit target, and 2 ATR below the close price for stop loss. The third indicator that I barely use is RSI, but I do think that there is a place that it can be very useful when combined with other price action when trying to trade reversal. That would be when the price is showing an uptrend, whereas the RSI show downtrend reversal through divergence. So this is the end of this indicator, and now I'm going to dive into candlestick pattern and formation. Candlestick pattern and formation. Candlestick pattern is designed in such a way to help determine where price might go next. There are hundreds of pattern and formation out there, which most of them have a weird name with complicated instruction. Feel free to go and study as many as you wish. You can also use candlestick math blending to understand them better. I have so many videos on candlestick math blending. Out of so many pattern and formation, I'm going to use 3 or 4 patterns in this video that I use the most in my personal trading. Candlestick pattern is used for the following reason. It helps provide clarity of the market sentiment, and also it is used for entry in trend continuation and trend reversal trades. The 4 candlesticks that I normally use in my personal trading are as follows. The first one is candlestick hammer. The second one is candlestick shooting star. The third one is bullish and bearish engulfing. And finally, the last one is close above or below the stomach candlestick pattern. Hammer and shooting star pattern. Hammer is characterized as a huge bullish power, and shooting star is characterized as a huge bearish power in the market. There are 2 ways to recognize the validity of the hammer and shooting star. The first and easy method is the length of the hammer's lower shadow and the length of the shooting star's upper shadow must be greater than 3 times the length of the body of the candle. The upper shadow of the hammer and the lower shadow of the shooting star must be negligible. The second method is use Fibonacci retracement. Put the Fibonacci retracement from the low to high of the hammer. If the body of the hammer be totally above the 38.2%, it is considered as valid hammer. Put the Fibonacci from the high to low of the shooting star. If the body of the shooting star be totally below the 38.2%, then it is a valid shooting star, as shown in the graph. Bullish and bearish engulfing pattern. This is a bullish engulfing pattern. It consists of two candles, both of them with 1 hour time frame. The first one is a bearish candle and the second one is a bullish candle in such a way that it engulfs the complete body of the first bearish candle. This candle has a huge bullish power, and if it's seen at the bottom of a downtrend, it suggests a downtrend reversal. Here I blend this pattern for you, and as you see, the outcome is a strong bullish hammer with 2 hour time frame, which suggests the buyers are in control of the market and it's time to go long. This is a bearish engulfing pattern. It consists of two candles, both of them with 1 hour time frame. The first one is a bullish candle and the second one is a bearish candle, in such a way that it engulfs the complete body of the first bullish candle. This candle has a huge bearish power, and if it's seen at the top of an uptrend, it suggests an uptrend reversal. Here I blend this pattern for you again, and as you see, the outcome is a strong bearish shooting star with 2 hours time frame, which suggests the sellers are in control of the market and it's time to go short. I have also so many videos on candlestick mat blending that if you like, you can acquire more knowledge. The last candlestick pattern is a stomach pattern. Close above the stomach candlestick pattern. Close above the candlestick pattern is a strong bullish reversal pattern that consists of two candles. The first one is a bearish candle and the second one is a bullish candle. The open and close of the bullish candle must be above 50% of the bearish candle. And we do not count the wicks. If the close of the bullish candle be above the high of the first bearish candle, the pattern is stronger. This pattern appears frequently in our daily chart. And if you see this pattern at the bottom of a downtrend, it suggests a downtrend reversal. Here I blend this pattern for you, and as you see, the outcome is a strong bullish hammer with a 2 hour time frame, which suggests the buyers are in control of the market and it's time to go long. This is close below the stomach candlestick pattern. Close below the candlestick pattern is a strong bearish reversal pattern that consists of two candles. The first one is a bullish candle and the second one is a bearish candle, both of them with 1 hour time frame. The open and close of the bearish candle must be below the 50% of the previous bullish candle, and we do not count the wicks. If the close price of the bearish candle be below the low of the bullish candle, the pattern is stronger. This pattern appears frequently in our daily chart, and if you see this pattern at the top of an uptrend, it suggests an uptrend reversal. Here I blend this pattern for you, and as you see, the outcome is a strong bearish shooting star with 2 hour time frame, which suggests the sellers are in control of the market and it's time to go short. So you see the three patterns I suggest in this video. The outcome of blending is nothing but hammer or shooting star. It suggests when you see this pattern, it is a sign of a strong bullish or bearish in the market. Enter the trade using technical analysis knowledge. This is the price trend TRP stock D1 time frame Yahoo Finance. So far you have learned the knowledge to use market structure, candlestick pattern formation, area of value, and indicator to predict price movement and make accurate decision when and where to enter the trade with great confidence. In this graph, the price is trending higher and making high swing high, and the pullback is making high swing low, for uptrend continuation pattern. Moving average also confirmed this uptrend since the price is above the SMA 20. So at this stage, we draw our support and resistance. The price come to support and resistance, here to support previous resistance, indicating a buy opportunity, and the price also come close to the moving average or dynamic support and generating a buy signal. The buy signal is confirmed by bullish engulfing at the support and also dynamic support of moving average indicator. The buyers are in control of the market and it's time to go long. These are all strong signs to enter the trade with great confidence. So we entered the trade at the close price of this candle, and we put 1 ATR below the low of this candle for a stop loss. So that is our stop loss. And we put 3 ATR. We put 3 ATR above the high of this candle, and that is our profit target. Now, the value of ATR, it's calculated here, $1.10 for this bullish candle, and also the information for this bullish candle is right here. Open, high, low, and close price of this bullish candle. The second method is to set our stop loss and profit target is we put 2 ATR below the close price for the stop loss, and we put 4 ATR above the close price for profit target. This way we can have 2-to-1 reward to risk ratio. So this is how we enter the trade using technical analysis knowledge. How to enter the trade using double bottom chart pattern. Chart pattern by far one of my favorite ways to enter the trade. Unlike candlestick pattern, chart pattern consists of a group of 10 to 50 candles that can help us identify market sentiment, market reversal, and can help us to identify possible entries like hammer and shooting star, engulfing, and so on. There are hundreds of chart patterns out there. Feel free to study them all or as many as you wish. In this video, I'm going to show you 2 chart patterns I use the most in my trading, and they are double top and double bottom pattern. Let's start with double bottom. This is the price trend QM stock D1 time frame. In this graph, you see the price is pushing down and create a level of support. Then the market bounced back up to a level of resistance, and it got rejected by the resistance level and going downward. The market hit and retest the support and bounce up and break the neckline and close above the neckline. Now, the way some traders they enter the trade is they wait until the price break the neckline and close above the neckline. So this bullish candle, it break the neckline and close above. Now, to enter the trade, we put our stop loss 1 ATR below the low of this candle, just like this, and profit target we put 3 ATR above the high of this candle. So our profit target is going to be like this. Now the information, the value of ATR and the information for this bullish candle, it's all marked here. So you can easily calculate the profit target and the stop loss. Some traders, they wait until the price retest the neckline and bounce back up, and at the first bullish candle they enter the trade, just like here. So that is how to enter the trade using double bottom chart pattern. How to enter the trade using double top chart pattern. This is the price trend QM stock D1 time frame. A double top occur when the market push up toward a level of resistance. Then the price got rejected by the resistance level and bounced back, going downward, hitting the support previous resistance, and it got rejected by the support, hitting upward. The price retest the resistance level one more time, creating top two and hitting downward and breaking this neckline. The price hitting downward, breaking this neckline and going downward all the way. Now it generates a sell signal right here. So traders, they exit the market at the close price of this bearish candle. So you can exit the trade and put your stop loss 180R above the high of this candle as a stop loss. And also for the profit target, they use the same candle and put 380R below the low. So that is going to be the profit target and stop loss. Traders, they can use another method too as well. They can wait for the price to pull back and retest this neckline one more time, and then at the first appearance of the bearish candle below the neckline, they can exit the trade and put their stop loss and profit target the same way as I did here. So the information for this candle, the ATR value and also the value of open, high, low and close are marked here. So we can calculate the stop loss and profit target very easy. Now, although I try my best in this video to cover and explain the important aspect of technical analysis to be able to start trading in a good direction, but the reality is I could not share with you everything in one video to be a consistent, profitable trader. I hope you enjoyed this video. Wish all of you a good luck, and don't forget to smash the subscriber and like button. That's all, folks. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.